Guys, welcome to a brand new episode of Smart Money. Now, can you own part or a unit of a home if you can't afford the full home? The answer is yes. Today we're here to talk about fractional ownership of real estate. Now, the fractional ownership market in India is currently valued at $500 million and is poised to surpass $5 billion by 2030, which is a 10-fold growth according to analysis by JLL PropShare. Today, we try and understand how to navigate this market. We have some key stakeholders joining us. Ghulam Zia, Senior Executive Director at Knight Frank India. Anand Narayanan, the founder of Alt DRX. Anand, that seems to be the grouse, right? That if you invest in a residential fractional ownership project, the rental yields are very low. But as Saurabh is saying, in a holiday home, the yields are 6 to 8%. Can you just explain to us, what are the different modes of fractional ownership that I can look at? And where are the rental yields the best?
Middle India, Sonia, has always grown to stories of your father, grandfather buying a home and it's multiplied several times in value over a span of time, right? I mean, we have not grown to stories of us buying, let's say, an office space and becoming wealthy. Real estate is about creating wealth. One component of that, Sonia, is about rental yields, right? So in real estate, I mean, I've been in real estate like the rest of the panelists for several years, and I have realized A plus B in real estate is always 11 to 12%, which would mean that A could be capital appreciation, B could be rental yields. In office assets, it's rental yields are stronger, capital appreciation is a tad weaker. Residential rental yields are a tad weaker and capital appreciation is a tad stronger. But net A plus B is 11 or 12%. That's how it is. And one needs to go with what conviction is. People generally, Middle India generally understands residential far more easier. If the attempt is to democratize real estate, which is to allow everybody to participate, then I think Resi is a great way to enter this market.
Okay. So can you explain to us, what is the difference between REITs and fractional ownership, right? Where is the liquidity higher? Because people don't even understand the basic concept of REITs. Forget about fractional ownership. So can you explain what is the main difference and what are the pros and cons of each?
Sure. So, I mean, REITs is a recent addition, especially the small and mid-sized REITs, where fundamentally the greatest issue with real estate is liquidity, right? It's easy to enter, very difficult to exit. So REITs as a structure give the ability to list a portfolio of assets that have already been fractionally sold into a REIT market. So there are two ways that the regulator is extremely wise regulator. I mean, there are two things that have happened in the recent REIT regulations. One is what kind of assets can be moved into an SM REIT structure. So the defined set of regulations have been put, minimum asset size of 50 crores, minimum investor pool of 200 investors or more. Those kind of assets can possibly be moved into a REIT. Simultaneously, the regulator has also given a permissive structure, like a conditional exemption kind of a structure where assets below 50 crores can be done in your existing SPV-based fractional real estate structure. So what this would mean is, if a residential portfolio of, let's say, to begin with 25 apartments built into a portfolio is where you start with, you can start with that, build that asset into a 50 crore portfolio, then eventually you'll be able to move that portfolio into a REIT structure. So it gives you a graduated approach. So where you can start with your fractional real estate model for operators like us, where you pool a portfolio of assets, fractionally sell it by issuing securities to investors, and then eventually move it into a REIT structure. So your current fractional real estate platforms will act as originators of assets, which would then feed a steady stream of new REIT schemes that can come in. Alternative, an asset is already 50 or 100 crores in value, that can be straight away taken to a REIT structure. You can make a public issue too.
Okay, got it. That explains it very well.